and welcome to our next presentation, now with Nordic Waterproofing. And to present the company, we have with us here in the room CFO Per-Olof Cervelius, Palle. He will give us a roughly 20 minutes presentation, and we will follow that up with 5 minutes Q&A. Myself, my name is Max Bacco, and I am an equity research analyst here at ABG. And with that said, Palle, please go on with the presentation.
Okay, thank you very much, Max. So yes, I'll take you through a little bit about Nordic Waterproofing here. And the modern group as such was founded in 2011 when the Danish private equity Aktier acquired Trelleborg Waterproofing and the Finnish installation services here. But however, we have companies going back to the 1800s, so our history goes way back. And then in the early 2010s, this private equity Aktier, they developed the group further, and then in 2016 we did an IPO. And basically since the IPO we've done, say, about 30 acquisitions, we've doubled in size, and we moved our businesses into more sustainable solutions for the construction industry. In 2020 we re-domiciled the parent company, going from Denmark to Sweden for, I would say, mainly the benefit of the Swedish shareholders. And now in 2021 and 2022, we have continued our acquisition drive. So if we look at what products we have, I mean, the core business, the legacy business, so to say, is this bitumen waterproofing membranes. It is a waterproofing membrane based on the residual from the oil industry, bitumen. And bitumen, basically, you use it on roofs, or you put it in asphalt and put it on roads. We also have synthetic rubber membranes, and it's looking like this one, that you can put out in larger sizes on the roofs and pre-manufacture inside. But it's an EPD material. Then we have our prefabricated wooden elements that's made mainly in Denmark and in Norway, where we do roofs and walls prefabricated inside the factories, and then we put it out to the construction site and put them together. And last but not least, we have our green environment for urban landscapes like these sedum on roofs, but we also have like parks and landscapes for roofs and inner yards. So these would basically be our activity areas. On top of that, apart from our products and solutions, we also have our installation services, where we install the products that we also sell. We also do install solar panels, and we have a production of metallic facades and eaves, security systems for roofs that we both manufacture and install. Our geographical footprint is very much concentrated in the northern and northwestern part of Europe. It's Scandinavia and it's the Benelux area. The Benelux area is predominantly the Seleco business, our synthetic rubber membranes. So I would say that we are present in fairly, over time, stable economies. We also, when we look at the business cycle, our cyclicality is a little bit less fluctuating maybe than pure construction companies that more is targeted against new build. Over a business cycle, our businesses are typically distributed 50% to new build and 50% on renovation. It differs a little bit by business unit, but on an average for us. Talking about sustainability, I mean, a lot of what we do is related to sustainability in different ways. Of course, protecting buildings and constructions with waterproofing so they don't get destroyed is a way of sustainability. I would also say that our both bitumen membranes and our EPD membranes, they have the capacity to last about 50 years. The warranty will for customers will be less than that, but they typically can last that long. You could also say that once you need to replace them after that many years, you typically leave it on the roof and then you put another layer on top as such. Our wooden solutions for the Tåsing Elementer, that's based on wood, is actually absorbing carbon dioxide rather than, say, concrete that emits a lot of carbon dioxide. If you look at our green roofs, that they contribute with biodiversity in different ways. And then our solar panel solution is quite, I mean, currently very, very interesting for many people with the current energy prices. And there we are present in Finland and Denmark, both with minority stakes in companies. Talking about acquisition, having doubled in size in 5 years, I mean, what we are targeting to a large extent is sustainable solutions in different ways. We also look for solutions where we can enhance our product and service offering, and if we can add some value through downstream integration. And we're not opposed to going upstream either when that would make sense. So in the last 18 months, we've done about 10 acquisitions now. The first one was a roofing company in Norway, and we also done a roofing company in Finland in northeastern or more eastern part of Finland where we were not present. We've further developed our presence in ponds and landscaping for synthetic rubber membranes in both the Netherlands and the UK. We took a step into prefabricated wooden elements in Finland. We had sales activities in both Norway and in Denmark, and we have a factory in Latvia. But the step into Finland was new for us in this area. And then we have the urban green landscaping, where we acquired a company in Sweden. And we actually announced a week ago about that we're going to acquire a company in Finland as well, ABGSC Trading, where we're waiting for the local municipality to approve that we buy the land, and then we will close the deal hopefully. And then we've added some products as well in different ways, both in Denmark and in Finland here. A little bit more about a few of the recent acquisitions. The VKP Group in Finland, it's a roofing and waterproofing service, and headquartered then in the eastern part of Finland. 75 employees, turnover of 9 million euros, and we acquired 70%, and then we have an agreement to acquire the remaining shares in 2 tranches in the coming 4 to 5 years. And then we signed the intent to acquire ABGSC Trading as well. That is the green infrastructure business in Finland. They're growing sedum, and they do various landscaping solutions. They're headquartered in the very south of Finland, in Taimisaari, 15 employees and an annual turnover of 3 million. Again, we've agreed to acquire 70%, and the intention is to do that on 1st of October this year. And together with our current presence in green infrastructure in both Norway, Sweden and Denmark, it enhances our footprint in this very important area. So we are very happy to see that happen. If we look a little bit, I mean, our development since the IPO. After the last quarterly report, we had a sales on a rolling 12 basis above 4 billion SEK for the first time. And as I mentioned, we doubled basically since the IPO, when we had about 1.7 billion SEK in turnover. A little bit, roughly a third of that growth has been organic, including price, and 2/3 has been from acquisitions. And I would say that about 85% of the sales is in the Nordic countries. Our EBITDA was up at 580 million on a rolling 12 basis. Profitability declined a bit after the IPO in 2017 to 2019 due to increases on input materials. And then we had the higher profitability in now 2020, 2021 and 2022. I would say I think we learned to manage the price increases, but we also did somewhat benefit from the situation during the pandemic, when people did not travel, rather stayed at home and maintained their properties. That's certainly worked in our favor. Our main measurement on profitability is ROCE, and the reason why we use ROCE is because our 2 businesses, installation services and product solutions, vary quite a lot in profitability, but also quite a lot in how they tie up working capital. So to get a fair comparison, ROCE is about the same normally for these 2 areas. We have a threshold that we should not go below 13%, and in the last 2 quarters we've been at almost 18%, but 17.9%. To a large extent, the improvement you can see in the graph has been driven by increased profitability. So these are our financial targets, where we say we want to grow at least on par with the market. We want to basically outgrow the market where we are present, and we say we do that. We do take market share from what we can see on all the relevant markets. Our profitability, as you saw on ROCE, should exceed 13% at all times over a business cycle, and our capital structure with a net interest-bearing debt in relation to EBITDA should not exceed 3 times at year end, and I think we were at 1.7 at the mid of the year here, and we typically have a better cash flow the second half of the year. And then on dividend policy, we say we should distribute at least 50% of our net profit to our shareholders. And we've done that all year since the IPO, with the exception of 2020 for all the reasons with the pandemic that year. However, then we did an extra dividend the year after, with that was about 50% of the result. So if I look a little bit more at the second quarter here, where we said that the sales last 12 months above the milestone of 4 billion SEK. In the quarter as such, we had a growth of 18%, 11% organic, and price was 13%, so meaning that volume was minus 2%. And this is something we expect to see for the coming years. With the new build being reduced, we would believe that going into 2023 we will see reductions of volume, and that continues. However, to some extent mitigated by price. We had an impact of 4% from acquisitions, and we had a 3% positive impact from currency effects. EBITDA up 13% to 260 million, first quarter above 200 million. And operating profit improved 20 million to 180 million. A bit weaker cash flow, I would say, in the second quarter. To some extent driven that we had a favorable development of accounts payable in the first quarter. I would say for the first 6 months the cash flow was comparable 2022 and 2021. And yeah, the earnings per share at just south of 6 kronor. So some highlights when we look at the second quarter here. We had, demand remained stable, and we've seen some signs of slowdown, and I think it's fair to say that stepping into Q3 we see a little bit the same pattern, that we see some signs of slowdown, but not necessarily, we don't maybe not see it in the numbers as such. We still have a good level on our roofing business, generally speaking, on the markets, and the order books continue to be on a good level also after July and August in the quarter here. But as I mentioned, we do expect a weaker demand for new build going into 2023 and possibly in 2024. In the second quarter we saw double-digit growth both for Seleco and our bitumen-based waterproofing membranes. Prefabricated elements in the wooden elements had a flat development in the second quarter, but there we saw a weaker development in Norway and a bit stronger development in Denmark. And the green infrastructure showed a positive growth in the second quarter, but their better quarters will then be in the third quarter for that type of business. And then installation services, we saw sales increased organically by 5%, and this is predominantly in Finland for us. And I think, as all are aware, we've seen a dramatic input on or cost inflation increase in the recent year, maybe a bit more, but in particular the last 6 months. And I would say that we have continued to manage that through increasing our prices to our customers, and through that have we absorbed most of these price increases. Within installation services, it has been a bit more challenging due to the large order books where we have fixed prices on particular orders, and that has made it challenging to adjust prices on already existing orders. However, we've learned along the way how to deal with this in better ways, and we changed our basic terms and conditions and work somewhat differently. So we believe that going forward there's still some risk for margin erosion, but we believe that we have been a lot better to handle this situation. And then we can also say that a couple of months ago we were probably more uncertain about our access to input materials. Following the Russian invasion on Ukraine, there was a lot of turbulence in different markets and how to get access to material. I would say that now that has stabilized. We don't see the same risk that we would be short on certain input materials. I think on the contrary, we rather see that we need to reduce our inventory from where we are now, because the supply chain situation has stabilized quite a lot. And as I mentioned, we did some acquisitions in the second quarter, but also to mention that we did acquire the outstanding shares in our Dutch subsidiary, Seleco, where we acquired 67% back in 2017, and now we've fulfilled that agreement and acquired the remaining 33%. And also the remaining 16% in the Finnish company Voutilainen, that was acquired the first 84% last year. Yeah, I think a little bit on the numbers where as I said, we were up 18%. I think I've commented on most of these actually. But again, 18% up, EBITDA increased nicely in the quarter, and as well as did the operating profit here. So our ROCE, as I mentioned, stable on 17.9, but however the cash flow a bit weaker with a cash conversion at 37%, and mainly due to us continuing to build inventory in the second quarter to secure our capabilities to deliver to our customers. And I think there we have succeeded, but where we are now, we see that we need to start to reduce inventories of both input materials and finished goods for the remainder part of this year. It's the reasons were valid at the time when we built it, but now we see we can decrease. Okay, yeah, I think I'll stop there then, and all yours.
Yes. Thank you very much, Per-Olof, for the presentation.
Thanks.
And now we do have some 7 minutes left for questions,
Yeah.
so that's perfect. You touched upon this during the presentation regarding the market and what you're seeing right now. And if we look at new build, do you see any differences between commercial and residential when it comes to new build and activity?
We expect, I mean, residential to go down. If you talk single houses as such, we would expect that to go down faster.
Yeah.
And whereas we are more targeted, I would say, against maybe commercial buildings and maybe public buildings as well in our portfolio. But yes, we see a difference there.
And is there any differences between the different Nordic countries, Sweden, Norway, Denmark and Finland and so on?
So far, it seems to me like Norway, we don't see. There were signals earlier that it was going down in Norway, but I just had my round of business reviews with the different areas, and there I would say right now Norway is keeping up a little bit better. But there is generally it's more talk about, okay, it's going to happen. We wait for it to come, but we don't really see it yet in most of the areas. I think it's a fair summary.
And as you mentioned during the presentation, you have 50% renovation and 50% new build. And the renovation side, is it fair to perhaps expect that side of the business should hold up quite well, even if we enter a slower economy?
I would say so, because I think there is a backlog on need for maintenance of buildings. So that's at least our expectation now. We do expect volume losses next year. I mean, in whatever range, if that is 5 or 10% or whatever you can see in the crystal ball, we'll see next year. But it's but we definitely believe that it will keep up better than companies maybe more targeted against new build only.
Yeah. And also, as you mentioned during the presentation during the last year or so, you, as many other companies, have been impacted by the cost inflation, which has been met by price increases. Would you say that input costs have stabilized now, or is it still an upwards trend?
I would say this is a big span, but I would say on average it's stabilized. But then I would say wood and metal is going down.
Yeah.
Oil, I think it's a little bit down again, the Brent, and we're dependent on that, but call that stabilized. And then we see a few materials that is actually a little bit up as well. But so on a rough average, I would say it's flattened out. That's what we hear. Yes.
Yeah. And as you showed in the presentation, quite a lot of your, at least in the Q2, a lot of the organic growth was from price increases from your side. With input costs now stabilizing, will it be possible or necessary for you to continue increase your prices, or is it stable on that level too?
I would say it depends in many ways on what market and what products, but so we did announce some price increases on a market, and we actually took them back because prices our input costs did not increase as we expected, and we felt the market was at the border where it could take. So we actually went out to the market and said we cancelled the price increase. So we worked with it quite actively, is what I'm just trying to say, that and seeing where are we and what can be done. So it actually works both ways.
Yeah. I guess that's appreciated by your customers when you...
Yes, I think there was some, as you say, appreciation of that.
Yeah.
Yes.
And this year you have made 3 acquisitions so far. Can you say anything about both your M&A pipeline going forward, but also have you noticed an impact on the M&A market in general, given the uncertain outlook that we have right now?
Yeah, if I start, I think we're going to do some more this year. It's hard to give a number, but at least some more will come in. Is what I expect from where we are right now in the negotiations. I think it's a little bit too early. I mean, we still have the good 2020, 21 and good start of 22 in most companies and high expectations on price. I would say it probably needs a little bit more time and maybe tougher results for expectations to come down. If I generalize.
Yeah, and as you mentioned partly during the presentation, your installation services segment has operated with unusually low margins during the last quarters, given the quite fierce price pressure and fixed prices and quite fragmented market compared to the other segment. Do you see an improvement in this segment over time going forward?
I think it will improve over 2021 to start with. I mean, we had, as we communicated, two companies in particular that had a challenging 2021, where we believe, I mean, we definitely see improvements this year, and we expect the improvements to continue. We also see that in the order books we have right now for installation services. I mean, volumes are higher actually, and margins are at least on the same level as they were. So it's. I would say that we expect it to be on a higher level than it was in 2021.
Yeah.
So,
okay. Yeah. And the final question, just to address the elephant in the room. In the end of the summer, you got a new owner, Kingspan, that is now the biggest owner in Nordic Waterproofing with 24% of the shares. Can you say anything about this? What are your expectations on your new owner? Yeah,
there's not a lot I can say about it, to be honest. And the reason is basically, I mean, I certainly noticed that Kingspan holds 24% of the shares. Also, that they have communicated that it's a strategic investment for them, but they're going to keep an arm's length principle, and they will not interfere in what we're doing, and that's what they're doing. So I really don't have any contact with them. So it's and I'm not really speculating in what they do. We'll see what will happen.
Yeah. Perfect. That was all from me. Yeah. Thank you very much for joining us today.
Thank you.
And good luck going ahead.
Yeah. Thank you. Thank you very much.